Hey, welcome to another market update. Today is February 17, 2018, and happy Chinese New Year to everybody that is celebrating the Lunar New Year. It's the year of the dog. So let's take a look at the market. First, let's start off with looking at the VIX. Remember last week I talked about the potential capitulation here, right? With the VIX, did not get above this high here, right? While the market was making a new pullback low, and you can see as the week progressed, and this week we saw the VIX pulling back, and it's kind of sneaking up a little bit, and this could be a sign that it tells us that we might be pulling it back a little bit from the recent bounce here. So kind of be a little bit cautious for the coming week. We might see a little bit of a pullback, and we'll take a look at some of those levels. Right, so let's go and take a look at the index chart here to see what the various index did, and you can see that all the major market indexes have recovered quite a bit. Although Friday, a couple of them actually closed negative, but for the week, all the indexes have closed positive. So let's go and take a look at the SPY. Let me switch over, and we'll take a look at the SPY and see what the price action is telling us. You see this the previous Friday low here, right? And that was when the VIX did not make a higher high on the on this particular day, and we saw this capitulation and finished the day with a sort of a doji hammer or doji spinning top. So we got the nice one-time framing up throughout the week, and on Friday actually printed a more of a shooting star. So in the coming week I might be looking for a little bit of pullback to retest this level, maybe somewhere around this 268 area before it bounces back up. Okay, and or the other scenario is that a little bit of a more pessimistic, and it could come back down here to somewhere around this 257, 258 area before it get a bounce. And if we take a look at on the 30-minute chart, we can see what those two scenarios will play out based on some sort of a pattern, price pattern. If we pull back to this this zone here, and then we get a bounce, right, bounce back up, then we're essentially looking at a potential inverted head and shoulder pattern on the intraday basis. And if we are looking at a pullback, maybe possibly come back down to this zone before we get a bounce here, then we'll essentially be looking at a double bottom type of a pattern. But again, both of them, the major move is pretty much the same. Right, so you could project that up and sort of get some idea, and if that is going to play out, then definitely the previous all-time high will be taken out. So like I said, the market internal have told us that the market has not topped yet, although we are seeing some price action on a correction, on a pullback, but that doesn't mean there's a new bear market has started. So we're still looking for a new all-time high on some of the indexes before this market rolls over. Okay, so let's take a look at the Q. Okay, let's go and take a look at the Q here. Okay, and looking at the Q, we see the same thing as the S&P, right? Got a little capitulation here on the previous Friday, close out with a spinning top or invert, a doji hammer, and one-time framing up. On Friday, we got a shooting star, although this one is actually closed a little bit of a bearish shooting star, and also closed negative. So again, basically that kind of give me a little bit more credence to look for a potential pullback in the coming week, and I'll be looking at a pullback maybe somewhere around down to the 160 level. Okay, then we get a bounce, or if it's a little bit more pessimistic, then we'll probably be looking a pullback to down to this maybe 156 area. And again, if we go and take a look at the intraday chart, that's why sometimes you have to go and look at the intraday chart to check out some of the potential price pattern that it might be developing, because if you look at on the daily, it's not so obvious, right, on the price pattern. But if we take a look at here on the 30-minute, so if I get a pullback up here, then essentially I'm looking for a inverted head and shoulder pattern, right, for this play. Okay, but if I'm looking for this thing to come all the way down to somewhere around here before it bounces back up, right, then I'm basically looking for a, you know, double bottom type of a pattern. Okay, but again, you know, we're basically looking at the same major move. But why is that important? Because, you know, it's important for us to see the price action when it gets to these zones, to see what is it, you know, what is it doing, and that would give us a clue of what is it trying to do. Right? So if the price come down here and we see it, you know, kind of, you know, try to bounce up, then we know that the probability is that it's trying to form this pattern, the inverted head and shoulder pattern. But if the price is bouncing up and then, you know, just can't get down and then start rolling down here, then we could look for a potential double bottom type of a pattern to see is that going to be formed. Right? So that's why it's important sometimes that we need to take a look at the intraday pattern, the chart, you know, the price action, to get intraday pattern to see what the market is trying to do. Okay, so let's go and take a look at the FAANG stock. And the first one we're going to take a look at, start off with Facebook. Facebook been kind of weak compared to the other FAANG stock. You can see on Thursday it printed a hangman, and then on Friday it printed a you know, more like a you know, inside bar type of thing, and it actually set up a evening star type of pattern. So I do expect Facebook to probably continue to pull back and maybe down to this 170, 172 area before we get a little bit of a bounce. And if we take a look at the 30-minute chart here, and that seems to play into a more of a you know, like this right here of a double bottom type of play, and also get into this trend line, you know, the little bit of a shorter term trend line here. So we could see that double bottom could be, you know, pattern could be developing if we see Facebook pulling back toward the 172, 170 level. Okay. And if we take a look at Apple, let me put up Apple here. And Apple been quite strong, you know, ever since that Friday. You see this, you know, that previous Friday, it formed this, you know, doji hammer, and look at how much of a move that it came back up. You know, I mean, this is a very, very strong move here. And although, you know, again, on Friday, it closed with a shooting star doji, and although it, you know, got a little bit of a bullish body, but again, it still closed down on Friday, but overall for the week it's up. But again, I'm basically looking for, you know, Apple maybe possibly pull back to this 165 area, you know, or if it's a shadow pullback, it'd be 170. But I don't expect it going to be shadow, because I expect the market going to pull back as well. So, you know, since Apple is pretty you know, heavy weighted on the index, so I do expect this thing to possibly pull back near this 166 area, you know, 164 area before it get this bounce. And again, if we take a look at the 30-minute chart, right? So if we do this, and even though we've come back down here and you get this pullback, right? So again, you know, we're basically looking for this kind of, you know, higher high, higher low type of move, right? Okay, so that's basically is Apple. And let's go and take a look at Amazon. Right, Amazon is also quite strong as well. Ever since that previous Friday low, it came up and almost getting near the previous all-time high. But it did form a hangman on Thursday, and then on Friday it got an inside bar here. So I do expect to look for continued pullback, you know, possibly back down here to this you know, 1380 area before we see another bounce here, okay, on Amazon. And again, looking at the intraday chart, so if we see a pullback to the zone here to this 1380, and that essentially set up this inverted head and shoulder pattern. Okay, and then let's take a look at Netflix. Netflix has also been quite strong on the recovery. Right, so you can see that it's getting close, just like Amazon got getting close to the all-time high, but it did finish up with a doji spinning top here. So again, basically you're looking for a little bit of a pullback, maybe to the 270 area, and then get a little bit of a bounce. Right, and if we take a look at the 30-minute chart here, so if you take a look at this bounce here, right, so again, you can see, have you noticed a pattern here, right? Have you noticed a pattern when we look at these inverted head and shoulder? And the same thing if you look at the head and shoulder pattern, it's basically we are looking at a higher high and a higher low, and then break out on a higher high, right? Okay, so that's why you look for these things, because here's the low, right? A lower low, right? Then it come up, form this higher high here, right? And then come down, form a higher low, and then break out on a higher high, right? So you have to have this low have to be higher than this low. So in order for this to be a lower low, right? So you get this pattern here, and here's the what we call the higher high, higher low, and higher high to form a new trend up, right? Okay, so that's why sometimes we look at these patterns, and it sort of makes sense in terms of human behavior and the market psychology. Right. So finally, take a look at Google. We see Google has also had a nice recovery, and again they all seem to display this shooting star type of price pattern on Friday. So that kind of tell me that the market might be a little bit exhausted on this this bounce here, and we'll probably be looking at some pullback on the short term, in the short term here. So we'll probably coming back to somewhere around this 1050 area. Right, 1040, 1050 area before we get a bounce. And again, looking at the 30-minute price chart here, if we come down here, get a bounce again, what do we see? Right, inverted head and shoulder, and also a higher high, higher low, breakout on a higher high. Right. Okay, so that's basically it. And if you find this video informative and useful to you, please give it a thumbs up by clicking the like. And also, if you're not a subscriber to my YouTube channel, click on the subscribe button on the lower bottom right hand corner, and subscribe to my video channel here at YouTube. And you can also follow me at Twitter. My handle is smtraderCA. And thank you for watching, and have a nice weekend.